This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us here today on Market Talk, always a pleasure to catch up with Bill Biedermann of agmarket.net, joining us to discuss what he is seeing and hearing in this market trade. And Bill, great to have you back on the show, sir. How are you?
Doing really good. Pretty busy, and I know that most of the customers we work with are trying to get to that last half of harvest. Going to be one of the earlier years for them.
Yeah, I've been hearing a lot of guys and gals are just running as fast as they possibly can across the Midwest, and they've had a really nice harvest window here to try and get some of this crop done here. As you mentioned, a little bit earlier than usual for many, but hopefully everyone's still having a good harvest. And if we think about harvest, Bill, no shortage of news items in this market trade to talk about. Just your perspective to start here. I know we're coming up on that October WASDE report on Wednesday. Felt like traders may be getting squared up ahead of that on Tuesday, but also there's things with the Russia-Ukraine war, et cetera, et cetera. There's just a lot swirling around this market right now, isn't there, Bill?
Oh, it's an amazing environment we're in. You know, when you look at the microeconomics of what's going on with supply and demand and things like that. I mean, if we just take the quarterly stocks revision and plug it into USDA's numbers, we're down to just a smidge over 1 billion bushel, which, you know, can't happen really. It takes 1.2 to run the whole pipeline. So you have to cut demand some more somewhere, or maybe we missed the yield estimate, and maybe that yield number of 170.25 needs to come up a little bit, you know, to make the numbers work. We don't know, right? But if you just took the stocks and put it in there, you're at 1.06 billion. I mean, that's like unbelievable. And it leaves well, we have to do some more rationing, which we are doing. But then we have to have a big crop in South America. And Brazil's coming on strong start. Argentina's still struggling with some dry weather. So that's the microeconomic drivers of the market. And, you know, how do I position myself when they could come up with 1 billion bushel? I mean, that's going to add value to price instantly. Or are they going to play numbers game and they change the yield a little bit and lower demand, and we end up with 1150 or maybe even 1.2 billion, which isn't too far off of what they were saying last month. I mean, it's USDA, right? They can do anything they want. So that's a really hard positioning thing to do in the next 24 hours, because tomorrow we're going to have the numbers. And then, like you say, on the international front, you know, are we going to see a real big push out of the Black Sea region to get more stuff shipped out? Is Putin going to say, hey, now I control all this land, all that grain is mine, so that's more income for me if I can get it shipped? And I need money, right? Because I need to pay soldiers and buy guns. Or is Putin going to go off the rail and push that button that nobody wants him to push? And he's been warned now that if he does push that button, there's going to be some very serious consequences from UN nations. So we don't know, right? I mean, if he were to push that button, the only experience I have is with Chernobyl. I was trading pretty heavily during Chernobyl. We saw an instant reaction that was fear-driven on one side of, oh my gosh, get me out of the markets, and fear-driven on another side of, we just wiped out, you know, the entire Black Sea region supply, which isn't true. It's about a 40-mile radius around the plant. But reality is it was extremely volatile, and it took 3 days to get the initial emotion out and about 11 days to finish it.
Well, and I think as well, Bill, on this wheat front, this wheat story, Tuesday's action, we saw maybe about half of the gains on Monday given back, yet we think about heading into the WASDE report, we could see the lowest U.S. ending stocks in what 15 years. So you look at this wheat market. Was this on Tuesday? Was it maybe just a round of profit taking ahead of that report? Was this some traders saying, "Hey, I'm just gonna take a little money here ahead of Wednesday," or was there something else that contributed to that move? Because to me, thinking about all the bullish factors in wheat, there wasn't a reason to take some of this profit off the table.
Well, I think that the weather forecast actually was a little bit more consistent in the idea that we're going to see some rain in the plains. Now, the amount of rain we're going to get was, if you look at all the models together, less than what we were kind of talking about yesterday, but when we had the rally. But today's sell-off, I think, did factor in two things: a pre-report, get me out. We've had a big rally, and secondly, there might be some rain coming in, and I don't want to get caught Saturday or Sunday when it's supposed to hit.
Very true. Very true. Good thoughts there. I didn't think about that forecast. Looking as well, just a little more quarter bean talk here, Bill, ahead of this report. And I think about the seasonal harvest pressure. I think about all the other issues that are out there. We think about export demand as well. Exports have been rather sluggish across the board. Soybeans, what was it? I saw port prices jumped up, scaring a lot of Chinese buyers, it sounded like. So just thinking about this export front, I know we had weekly export inspections today. What are your thoughts on this demand picture when it comes to quarter beans right now? Because it's looking a little iffy.
It's a concern. It really is, because the strong dollar has hurt us, and then our geopolitical problems that we're having and tensions with China, are one of our largest customers. Obviously, for beans it is, and corn it's up there. So those are huge concerns. But the worst part about all of that are two things. Number one, the pace of our export sales has dropped off dramatically in the last 8 weeks. And secondly, these problems on the river system are questioning whether or not we can even deliver and perform. So, big concerns. Yesterday or Monday, when we had that big rally in the beans and they got pretty close to $14, they got up to $13.98. That was probably a selling opportunity, to be quite honest. I mean, if USDA goes in and makes the adjustments from the quarterly report on the old crop numbers of 274 on the stocks, and then carries that into the new crop with more carryover, and then let's just say they raise the yield a smidge because bean yields have been coming in good, and then they address this demand concern that you just brought up. I mean, we could be pushing 300 million bushel carryover, and just a few weeks ago we were worried about 150. So, excuse me, the dynamics of this bean fundamental have changed dramatically in just the last 15 days with what we're seeing in yield, what we're seeing at USDA, what we're seeing on the river and the ability to export it. All of these things are concerning.
Well, and I'm going to throw on top of the river issue as well. I'm glad you brought that up. But now talk this week that the rail strike is potentially back on the table. And I know that is still a concern as well. And I mean, if we end up with a rail strike with low water on the Mississippi, creating barge issues, you throw in, any trucking issues that are out there in the supply chain, I can't imagine what that would do for ag commodities, Bill.
Yeah, well, the person who may not have been around very long would go, "Oh my gosh, that's bullish. We can't get a supply." But if you've been around at all in this industry, you'd be going, "That's just going to back up inventory, and it is going to kill us." And that's the reality that we're worried about. And I think that would be the reality of what we'd trade.
Bill, as well, thinking about the river issues, trying to get fertilizer in for fall application. And I know thinking about next year's crop, if we end up backing up some supply and hurting prices, but also farmers looking at their inputs, I know that's still a huge concern when I talk to farmers here across the country. Bill, what's some of the latest you're hearing from guys, maybe as they're working through harvest, but still thinking about next year?
The worst conversation that I am fearful of is, we put out recommendations and in the last 2 months to get to 50% sold for 23, because we made recommendations to get some fertilizer bought. But we're not just going to buy fertilizer and speculate that it'll pay off. We want to lock in some profits. You can lock in a floor of $6 and a ceiling price of $7.50 net board price. That's going to pay for this stuff, even if you just do a third of it, So if you're doing 50%, you even got some built-in margin. Same with the beans, with a floor ceiling kind of a contract, you can do that. And my biggest fear and concern is that if we have a break based on what you just talked about, and these farmers go, well, what do I do? I was going to pick up the phone and then I got busy and I didn't do it. And what do you do now? What do I do now? And the market could be a buck lower, right? I mean, if we have a 300 plus carryover and the news continues to be bad overseas, that in South America it gets good weather, a dollar down wouldn't take long.
Well, and to that point, you and I have talked about this many times before, Bill. Risk management. I can't say it enough. Being smart and like you said, picking up that phone and not forgetting to pick up that phone is so crucial in markets that are as volatile as these ones are right now.
Yeah, that's right. I mean, in 3 weeks, just back on 9/21, the bean market was at 14.93, and 3 days ago we were at 13.50. That's almost a buck and a half, right? In just a few weeks. So you have to look at your operation from a profitability standpoint and not try to pick the top or the bottom of the market. If you're buying fertilizer for next year, you better be looking at your profitability and saying, okay, let's lock it in. Why risk it? Get your inputs covered. Gamble on the rest.
Very, very true. Bill Biedermann with agmarket.net, our guest today here on Market Talk. Bill, would love to get some of your thoughts on the macro picture, the energy side as well, thinking about those storylines a little more. I know King Crude sitting around that $90 a barrel mark. Last week we had the OPEC news. What are your thoughts in this energy trade and the macro picture as well, and how all that is kind of playing into the ag commodities right now?
Right. So looking at the heating oil is probably the leader because we're going into the heating season. We've seen a lot of conversion in Europe to back to oil and or wood, believe it or not. My daughter's over there and it's pretty amazing some of the stories she said. So heating oil should be the leader on the upside in this market, whereas crude could be kind of the dog. And in reality, I think right now we're probably looking at a trading range between somewhere in the low 80s to mid 90s on the crude oil market. So we just hit the top end or near the top end of that. We got up to 92 and a half. So maybe $95 will stop it for now. But there's so many cogs in this wheel that keep turning and churning and falling off the wheel that it's, you got to really be on it to follow it. I think the best advice right now is if the market breaks based on recessionary, deflationary, fiscal policies, liquidity problems, concerns about world banks, and stability in bond repayment in different countries. So I just painted a pretty bleak concern about the world, which there is right now. Mm-hmm. And we get a sell-off into the low 80s. I would say lock some in. You're going to want to buy heating oil because that's diesel, but I'm watching crude as the indicator. On the other hand, if we have a problem in Russia that escalates and they do something crazy, silly, I think energies would explode. Everybody's going to want to get coverage on. So food and fuel would be the thing that goes up. So basically a neutral standpoint, but use those price points to just get protection. And if it goes back up to 95 and there's no news out there, sell out, take profit.
And Bill, real quick as well, just a broad look at livestock trade after Tuesday. Cattle had a fairly strong day with corn down a little bit. Hogs, front months were down a little bit, but deferred months were okay. I know this protein sector as a whole kind of tied, on the demand side with the grocery store, with the economy, et cetera. But just any thoughts in the protein sector as a whole as you look at it here mid-October?
Absolutely. First of all, people are going to eat, right? We learned that in COVID that it's way better to eat at home. You get a better meal and you get more volume. If you're like me, you like to eat a lot. And so eating and cooking at home is better. So we've established at-home demand like we have not done in probably 15 or 20 years. So there's a floor under this market. Number two, you got bird flu. You're going to see people move away from the poultry side, whether it's, the right thing to do or the wrong thing to do. They're going to shift. Third thing is that we've seen a really healthy sell-off. I mean, these hogs, I don't really trade hogs, but they went from 89 all the way down to like 73. I mean, that's a pretty big sell-off and got down and well below our index. The cattle market, which I do follow, even though I was told as a young trader down on the floor, don't ever trade anything that kicks you. Well, I'm kicking myself because I wanted to buy cattle yesterday. And I was one of those guys that didn't get the phone picked up. So I think these cattle are solid too.
Well, a lot of great stuff, a lot of great insight, Bill, as always. And I know you and the team there at agmarket.net can really help folks. If they have questions, you have a lot of ways for folks to get in touch with you. How can they reach you, the team there at agmarket.net, Bill?
We'd love to talk to anybody. Just call us at 844-4AG, MRKT, market, or just go online, agmarket.net, and just zip over to where it says agmarket.net Intel. And you can sign up for a free trial and you'll get all our reports, and then you can weed out the ones you don't want, but you'll get that for 30 days.
Bill, always great to catch up with you, sir, and enjoy the conversations. Thanks for the time today, and we'll talk to you again real soon.
Okay. Thank you, Jesse. See you.
Bill Biedermann with agmarket.net, our guest today here on Market Talk. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.